Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA Wrap. When we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves just the one question, and that is, what happened today, and what does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, reached up there, right-hand side, hit the subscription. Each time I push content, you'll get notification. As far as what did happen today, let's take a look at the numbers. Another sideways day as we waited on the Apple earnings. NDX just will not go down, keeps hanging up there. It's a tech-led rally all the way up. It's been that way. Continues to be that way. Tech continues to hang. It was all hanging today, waiting on Apple. Apple comes out after the bell. They sell down into the news, and then after the bell, they jump about $3 and then give it all up, close down about $1 after hours. So Apple, yes, they hit their numbers. Yes, they did everything they were supposed to, but no, they just didn't blow things away like everybody expects. Expectations are always more for Apple, and Apple sells down as a result. So Apple's not going to drive it. What was driving it today was the biotechs. We have talk now that they've become too cheap. People are going to take them over, so to speak, and so they started getting juice today and coming back. But you know, when we look at these markets, as we will here in a few seconds, you're going to see the same sort of pattern. I'll point it out to you, and that is that all these markets are coming back to the points where they should try to roll back over. And I know it doesn't feel that way after this kind of a march higher, but honestly, that's where they are. The exception, NDX. So overseas, DAX, CAX, both down 1%. You had the Nikkei down last night. You had the Taiwan. The Chinese market was actually down, ended back up slightly. Actually, it was down slightly. I think this is the evening numbers. But the big drag today, again, Russell. This cannot get going. I talked about, you know, what's in this thing that's causing it to do this. We know it's small caps, but what are the industry groups and so forth? One of the members started looking this up for me today, and I did a little bit more work on it afterwards. He got me going, and it's not what I thought, right? It's not XLB type stocks. It's not materials. It's not energy. They account for like 6% together. If you look at it, it's healthcare, technology, financials. It's just the small companies can't produce what these large companies are producing in terms of gains in this market. And I'm not certain what that tells us, but it does tell me one thing, and it's not that it's just the bad part of the market that's showing up here. It's the small caps unable to produce. Let's look at the numbers, or actually the charts. I got the S&P 500 up. Now, if you look at what has happened before, each time we've come up and did this, right, did a little pause here, a little pause there, a little rollover for 2 days, another little 2-day rollover. Each time we spiked out of that area. Well, what do you got here? A 2-day rollover coming into the Fed. Is this thing going to spike out of here and just head higher again, right? Go up to the highs? You know, folks, anything's possible, but this looks more like this is trying to roll. It's going to try to come back into this area and potentially even deeper. There's a lot of gaps down here. It almost got to the gap today, just shy of it. You got gaps below that. I know you go with the trend. The trend right now is strong to the upside, but you're testing the bearish, retest, regenerate. And I'm going to pull the weeklies over. You're testing the bearish, retest, and regenerate, and the probabilities are extremely high that this thing is going to try to roll back over. You've got this one here, and you got one just slightly underneath it, and this is on the weekly, and you also have them on the dailies. They're both right at this area. This is where it's come to. This is what it's trying to do. It's trying to roll back over. Whether it regenerates to new lows, which would be a heck of a feat, or just simply pulls back and then sets the stage for another attempt coming into the Fed meeting, that is the setup still. And I don't know, when you think about the Fed meeting, I don't know that there's anything the Fed can do to juice this market. I mean, they have bought every Fed meeting so far, right? Now, they've given it back afterwards, but they've bought them. What is the Fed going to say? we're never going to raise rates again, maybe? I don't know. I don't know what they're going to say. But I don't. The risk seems to be the downside, not the upside, on whatever the Fed does want to say and or do. Moving over to King of Kings, we got the NASDAQ, the NDX actually all the way up. Huge gap up last week on those trifecta earnings, hanging up there 3 days in a row. Won't give it up, won't come back at all. But if you look at the broader NASDAQ, right, the composite itself, it spikes up to this level, holds it, also doing the same sort of a view, but this one is actually doing the retest, regenerate as well. It's doing it on both time frames. The weekly and on the dailies. Those are here, and you can see it's right at them. And there's another one right there, right? This is where it all is, folks. You get over this, well, great, you've done it. But unless you do get over it, it's the same thing, right? You got to set up to try to come back down and try to roll this thing back over. And finally, if we take a look at the Russell never was able to even get over the swing point high. Russell also pushing back down. It's got some volume expansion here coming after the swing point low. If the Russell starts breaking to the downside, right, it will be the first to try to test back down here at the lows. And then, of course, it will be one to watch if, in fact, that starts to roll over and it starts to happen. I wanted to point out, if we look at the over here on the home page, the market trends. Let me get it lined up here for you. If you look at this, on the various trends, intermediate term trends, we've only got one of all the sectors that have turned back from the bearish. And I know it looks like you've been rallying forever, you're making new highs, so forth, right? But you still haven't transitioned out away from the bearishness that exists on this time frame. And I know it doesn't feel that way, and everybody doesn't talk about it that way, but that is the setup. So let's see if they can start pulling away and start actually transitioning trend back to sideways, maybe even back to bullish. You need 2 or 3 of these to turn for the rest of them to try to do the same. And so far we've only got one, and it's in technology just as you would expect. And it's just a reminder that the bigger picture still hasn't turned yet. And speaking of the bigger picture, the strongest index over in Europe has been the CAC, of the big two. That one, I wanted to just show you this. This one's coming back. Here's the swing point low. It's doing a bearish retest, regenerate. And what does it do? It comes right up to the spot where it's going to have trouble, and that's where it has trouble. It's what you would expect. It is what's happening. If we look at the German DAX, right, here's a nice big run off the bottom. He's already done his extension here. I mean, all of these things have done what they were supposed to do off the lows. So you get the extension up, right? This thing carries, does everything it's supposed to do. And what is it doing? It's coming back into a resistance zone on the daily time frame. And if we flip over to the weekly, it's also doing the bearish retest, regen, and it's in a different place. It's coming up against this particular bar. And what is it doing? It's fighting it, and still can't get over it. And you look at index after sector after sector, and they're all basically doing the same thing, folks. They're all coming back up to those areas where you should get sellers, and you are getting some selling, or at least you're stalling at those levels. You haven't gotten really any selling yet, nothing to roll it back over in a big way yet, but they're all doing the same thing. It's really going to depend on what the Fed wants to do tomorrow, what they want to say, and whether this market interprets that dovishly one more time and somehow that's going to take everything higher, or if it doesn't, and if it thinks that those rates are going to rise, how is it going to deal with it? And speaking of rising rates, the Europeans have told us in no uncertain terms that they're going to put some more QE out there fairly soon, probably in December. That has driven this dollar up quite excitedly, and the euro down. And you've got China actually taking action last week to lower their rates again, to do their own easing. There's a speculation that Japan's going to follow again, and you're going to get that from other countries as well. And if this dollar starts to take off, you're going to see pressure on these markets, not the comfort that you see now. If you look at it on the weekly, the key here is going to be the breaks of these swing point highs. 2560 is the area, 2560 to 70. You get over that, all you got is the top left. If this thing starts to leg up one more time, and if we pull up the monthly here, if this thing was really just a pause, and I don't do so much of this classical TA stuff anymore, but if you want to draw it in, and it's a bullish flag, that's the pattern that has set up here on the classical stuff. And if this does start to continue higher, which is the way these things are supposed to break, you're going to get another move, another leg up, and a new set of highs. And what happens in this scenario when you have something like this is the market, it was a shock when it did this, right, when it extended up. But they get used to it, right? It's like 6 months we've been doing this, 7 months. Nobody cares anymore. Well, wait until it gets up here again, right? And starts legging up that way. All of a sudden, everybody's going to care about it, and you're going to hear it again, and you're going to see, everybody talking about the earnings and so forth as a result. Going to be pressured, right? But of course, that's not the only thing going to be pressured. It's going to be all your commodities, and we already know what's happening there. We had the break last night. We talked about it. 2 to 3 bars extension on this time frame. You got bar 1 tonight. It looks like it's going to try to bounce a little bit tomorrow, but again, it's going to depend on what the Fed says and does. Oil taking it on the chin, so to speak. And I did see the silver and gold markets hold up pretty well today. You got some more bad economic numbers today. There's your silver market, and if I pop over here to gold, gold was holding up pretty well as well today. They've all faded back. They can get a little bounce. But I don't think these are going to go anywhere, because I think that dollar is going to get stronger. And I saw another couple articles today about gold bulls and how it's fixing to take off. I think it's a pipe dream actually, but they can believe what they want. It's doing a bearish retest regen, and it's going to try to come back in, I suspect. I'm on a weekly now. Here's your bearish retest regen. You test it. What are you going to do? You're going to try to roll it back over and regenerate it lower. That's the way those things work. This is where your sellers should show up. This is where sellers look like they are starting to show up. We'll see if in fact they continue to. And if it starts to leg down, do they pile on or not? That's always the question. So that's what you're looking at. That's the supply and demand on the chart. That's what you're trying to understand. And the key will be the roll and how it comes back into the big bars, and that's what it's trying to do right now. Okay, so we're set up. Fed's tomorrow. We're gonna get news one way or the other. They're gonna tell us something, and I'm about tired of having to not so much second guess, but to consider every action you do as a result of what the Fed is or isn't going to do. And I'm so sick of hearing them. You got like 15 people talking out of their different tongues, and they're not on the same page, and there's all this guesswork. And because they're such a powerful institution, you have to pay attention to it all. And it's like a nightmare. It just keeps coming back over and over and over. And tomorrow is just the latest iteration of it. It's every 2 or 3 months you get this nonsense. Actually, it's worse than that. You get a decision every 2 or 3 months, and you get nonsense all the times in between, except for the week prior to the Fed meetings when they finally shut up for a little while. But if they come out tomorrow and they tell us that they're not going to raise rates until mid next year or something, this market's going to take off. If they come out and they tell us they're raising rates, or they're almost certainly going to raise them in December, this market's going to sell off. And if they say what they've been saying, which is we don't know what the heck we're doing, and we're quote unquote data dependent, what a great term that is, then this market is just going to not know what to do, and it's had a big run, and it's just going to kind of probably oscillate, and I would think drift back in as a result of it. That's where we're at. We'll see what they do tomorrow. We'll talk about it then. As far as Apple's not going to help this market go higher. Question is will Apple hold the 110 area? That's the key area for it tomorrow. Have a great one, folks. Thanks for joining me. You tell a friend, tell two. I'm L.A. This is and was your daily NeoTA Wrap. Have a great night, and I'll see you next time. Good night.